Kupina kuphi emakhaya amadolobheni asekomplasta khona leli Yilungelo lakho bekunene it's your right silethela ke bukhoma kuma SABC 1 Mzansi for sure mina ke ngingisimphiwe Ngcongwane bekunene sikhathi ke sekukhokha umthelo sesifikile kulomnyaka ngaphasi kwesimo seCovid-19 tinvo ke setentiwa ngendlela ehlukile kunaleminye iminyaka phela mahhovisi eSouth African Revenue Services iSars sekavaliwe manje kumele utsende njani ke nyalo asasingene endzabeni yefu namhla. Now, this year's tax filing season comes with new ways of interacting with the tax collector. No walk-ins, no face-to-face contact, and tougher action against those failing to declare their income, including those collecting any form of rental income, even for the little that you're getting for your back room. And to tell us more about what is new with the 2021 filing season, we will extend a warm welcome to Anton Fisher from the South African Revenue Service. Michelle Dickens, yenage umele Credit Bureau Profile Tenant Network, and we'll try to establish connection with them in just a moment. Lokumcokela kumele sukwati ukuthi ke Sars kulomnyaka so tawutargeta ke bo mastandi noma ke labo ke labane ama properties noma ke say back room ukuthi ke nangabe uyarentisa noma ke uyayicashisa leyo room leyo Sars so ufuna ke umthelo wayo noma ngabe likamerwana nje emva umkhukhu noma ke likamero nje ku back room Sars so atahambela umthetho noma ngabe kuse madrobheni noma ke malokishini kepha ke Sars yena ke so ufuna ke inkhokha noma ke umthelo kulelo hlangothi. Okay, Asesibena Michelle, I do understand Michelle is now joining us. Michelle, a very good afternoon. Thank you so much for joining us. Welcome.
Lovely. Thanks to be here to come chat to you.
Indeed. I mean, what does this mean, especially for the black communities who are not so accustomed to paying tax, especially for their, little back rooms?
Absolutely. So if you go back and you have a look at the amount of households that are in rental accommodation, we're looking at 1.6 million households that are renting either in informal backyards or informal in the backyards, or renting rooms or granny flats. So collecting tax on this rental profit will affect landlords in excess of 1.6 million landlords.
Okay, and then in terms of regulations, because we know that back rooms are not regulated by, by certain authorities. So what does that mean? Does that mean that they have to be registered?
So in actual fact, if we go and look at the Rental Housing Act, the Rental Housing Act defines a lease and what the lease pertains to. So a lease is between a tenant and a landlord for the rental of a dwelling for the purposes of housing. And when we go look at the Rental Housing Act, it stipulates what a dwelling is, and that can be a formal house, it can be a shack, it can be a hut, it can be a storeroom, a garage. So it's not limited to formal housing. In actual fact, the Rental Housing Act already regulates informal housing within the informal market.
When you say these structures are regulated, what do you mean? Do you mean that in terms of rental, whatever rent I'm charging for my little property has to be, within the confines of the law?
Absolutely. So the Rental Housing Act is quite broad, and it speaks to the protection, the responsibilities of both the tenant and the landlord. Things like, for example, your lease agreement doesn't have to be in writing. It can be a verbal lease agreement. What is agreed between the parties is what the value of the rent is, when it will be paid, and for how long the term of the lease agreement is. It protects tenants from things like being locked out of the property, or from being chased out of the property for non-payment. In actual fact, the law protects informal housing as much as it protects the formal housing market. Things like deposits, so how to regulate deposits, etc. When it comes to the tax component of it, the tax is charged on the profit of the rental income. So if we have a landlord who's earning a rental income, and it doesn't matter whether the landlord is either in the formal housing or informal housing market, SARS expects landlords to submit tax returns on what the income of the property would be, but also what the expenses of the property are, and only taxed on the profit of the property. And of course, at the low end of the market, You do have a lower tax rate to start with, as well as you would have rebates that you could apply. And tax thresholds that you could apply. So you could still be in a position in an informal property market, and even in a formal property market, where you are submitting your income tax returns for rental income and yet not actually paying any tax on the profit, because the profit is so little.
Michelle, I suppose then that the law in terms of, well, when it comes to the informal rental market is very vague, and there will be so many loopholes because, for instance, it doesn't state whether that particular property is under a lease agreement or there is a contractual agreement between the tenant and the landlord. Does the law cover that aspect?
Absolutely, because the law is clear that a lease agreement can be in writing or it can be verbal. Yes,
Okay.
there are amendments to the Rental Housing Act that were drafted in 2014 that haven't come into place yet. We haven't been given an effective date, and that would require that all lease agreements would have to be in writing. But as it stands at the moment, a lease agreement can be a verbal lease agreement. And so what SARS is looking to tax on is any income derived as part of the renting of a property, whether that is short-term or long-term. Did you receive any income from providing accommodation to people in your house? And what were the expenses that you could then offset against that? And only the profit would then be taxed. So what kind of expenses are we talking about? We would be talking about things like if the property was bonded, the interest that you could deduct, the interest payments to the bank that you could deduct. We'd be talking about your rates and taxes payments, your municipal charges, your utilities charges, your water charges, your agent commission, for example, if you had an estate agent, granted that would be more in the formal market than the informal market. Repairs and maintenance. So if you had to perform repairs on the property in between the tenants, or something broke within the property, the cost of those repairs would be a deduction. So whatever income you earned, and let's say it's 1,500 Rand per month income that you're earning off your informal property, you times that over your 12 months, and that's going to give you 12, 13, 14,000 Rand.
Yeah.
What were the expenses that you could then deduct off that? And the profit at the end is what would be taxed.
All right, Michelle, thank you so much for raising that particular aspect of this discussion. And I want us to focus a little bit more about the informal rental market, because in the township communities especially, it's very informal. I mean, the arrangement is formal, and in terms of paying the rent, it is informal. They pay cash, and some of them are even unbanked. So they pay cash and do whatever they want to do with it. So how does SARS track whether a person owns that particular property or whether they are renting it out?
Yeah, that's where it becomes a challenge, right? And that's where SARS requires compliance by landlords, by investors who are renting their properties out. So the first is your IT3B form, and of course platforms like Airbnb would have to submit information through to SARS. Estate agents are required to submit information through to SARS in terms of who the estate agents by law have to know their clients, they're accountable institutions, and they then submit to SARS on an annual basis who their clients are, what the income was that was generated off their property. So that's in the formal market. In the informal market, as you state, it's a very cash-based business. Yes. And so SARS would have to rely on compliance by landlords to submit this information.
Do you see that happening?
In the current market,
in the current market, and especially in the township market, compliance. I mean,
absolutely.
Yeah, I don't. Well, it's up to us to decipher whether that is a possibility.
Absolutely. And I do remind, it's not just about the tax payment that needs to be made. There are very much circumstances of understanding that people who are earning an income through property income through rentals, that they would not be in a position to have to pay tax at the end of the day. For example, you're only taxed on the first 1 Rand to 205,000 Rand that you earn per annum at 18%. If you get your first threshold, which is 83,000 Rand. So your first 83,000 Rand, you're not taxed on. If you're over the age of 65, that's 128,000 Rand. So the first 128,000 Rand, that would be profit in terms of your rental income. you're not taxed on. If you're over 75, that goes up to 143,000 Rand. And then you have rebates on top of that. So if you are in the first bracket, which is up to 205,000 Rand, and your rental income exceeds, say you're over 65, 128,000 Rand, you then get a rebate on top of that, which may put you in a position where you are compliant, you're submitting your tax return, but you are in the threshold, which means that you're not having to actually pay anything to SARS, but you are compliant.
Okay. Michelle, let's leave it there for now. Please stay on the line. We'll continue our discussion in a moment. Mbukeli-ke asesisishiyelele ngasetitolo siyabuya khona nyalo leli Yilungelo lakho. Sikwamukele futhi ngibukele incingo tethu sesivuliwe ukuthi ke nawe ke ungaba ingcenye lenkulumo yethu ungasishayela kucingo ku 0117146918 noma ke 0117146919 ungasithumela futhi na-email ku consumer@sabc.co.za ungaphinde usithole futhi na ku Facebook. Namhla ke bekunende sikhuluma ke nge-tax season ye-SARS njengoba senathi ke ukuthi ke isikhathi sekubhadala umthelo ke SARS sesifikile. Namhla ke sitawubuka ke indzaba ye-informal rental market lokusho ukuthi nabe unegarage noma ke une-back room noma ke kamero endlini yakho kepha ke uyalicashisa lelo kamero lelo SARS sofuna ukuthi ubhadale umthetho for logo sine TPN noma ke i-tenant profile network lokusho ukuthi kuyinhlangano ke lebuketa bacashi noma ke bantu ke labantu ama properties laba rentisako futhi ke indzaba leti regulator ke noma leti ngamela ticashi noma ke labo ke labacashisako sina Michelle Dickens ke CEO we TPN. Now Michelle, thank you so much for staying with us. I mean, at what amount does one have to declare income or rental income, especially in the formal rental market?
So as soon as you have any income, you need to declare it to SARS. So if you are in the formal working market, what you'll discover is that will be submitted on your behalf by your employer in terms of your PAYE, your RP5, and that information will automatically be uploaded into your e-filing profile, which you can then submit. Okay. On top of that, if there's any additional income that you have earned, and that could be on a number of different income streams. It could be interest that you've earned. It could be dividends that you've received from a business, maybe not so much for our informal landlords, but it could be dividends that you've received. It could be an inheritance that you've had. It could be rental income that you've received. Whatever the income is that you've received, you declare that to SARS, and you then declare what, in addition to the income, you declare what the expenses were. And SARS will determine what is then your tax profit based on the income minus your expenses equals your tax profit. That tax profit then determines the rate of tax that you would pay. And that's accumulation of your income from your formal employment that you may have, from your interest, your dividends, your rental income, whatever that is. That final total will then be taxed at your personal income tax rate, which at the low end of the market, the 1 Rand to 205,000 Rand, that'll be at 18%. So whatever the profit is, you'll pay 18% of that over to SARS. Remember that you're going to have a threshold, so the first 85,000 Rand or 83,000 Rand is not taxable. For our older generation, that goes up to our over 75s to 142,000 Rand. And then you get a rebate on top of that. And the idea there is that for our low income houses, that yes, they do receive an income, SARS does want to know about it, but they don't necessarily want to be, and I don't speak for SARS, they don't necessarily want to be collecting on that profit, which is why there are these thresholds and rebates at the low end of the market.
Okay, so Michelle, if I understand you correctly, you say that there is a threshold of 18,000 Rand. So even if you are below that threshold, you still need to declare, even if SARS will not be taxing you on that particular amount.
100%. It's
okay.
83,000 Rand, that first threshold. And then the tax rate would be at 18%. So say, for example, your taxable profit was 205,000 Rand. You're below the age of 65. You would then deduct that 83,000 Rand from your 205,000 Rand. You then get a rebate on top of that. So you apply that deduction, your rebate off that, that's 14,000 Rand. And then on that 205,000, less the 83,000, less the 14,000 rand, we then calculate 18%, and that would be the tax payment on that amount. So if you are a landlord and you're 65 and you don't earn any other income other than the income that you earn from renting out your properties, then your threshold is 128,000 rand.
Okay.
And that's the profit. So you wouldn't have to pay tax if your rental income was less than that amount.
The reason I'm asking this, Michelle, is that there's there's this sector that is becoming more popular, that of hosting our homes to guests at a fee. And there's a platform called Airbnb, wherein people rent either a portion of their house or the entire house to guests. And it could be for a limited time. So are they also liable to tax?
Absolutely, 100%. So if you earn an income because you've rented out a room in your home, or you've rented out your home or an area of your home for a short amount of time, equally you are liable for the cost of that profit on the income that you've earned. So say, for example, you have a home and you are Airbnb it out for the weekends. Then you would have to declare the income that you've earned for that weekend income over the 12-month period. But you could offset the expenses of the property prorated for the period that the property was let. So if you let the entire property for the weekend, you would then offset the expenses of the property for that period of time prorated.
Okay. So what if I rent a property from somebody else and then I decide to also rent it out or sublet it? Who's liable for tax? Is it the owner or is it me who's renting the property from the owner?
Both. You're both landlords.
Whoa.
So you don't have to own the property to be a landlord. So the first owner of the property takes his property and he rents it out unfurnished. And he rents it out, let's say, for 10,000 rand per month. I'm making numbers up. He rents it out for 10,000 rand per month. He would then have to declare his income for 10,000 times 12 months is 120,000 rand per annum. The second, and he would then deduct things like the rates and taxes and the electricity and water and estate agent charges and interest on the bank, etc. He would deduct that off his expenses and he would get a net profit, which he would pay tax on. The second landlord is now subletting the property to the next person, and he's going to furnish it, let's say, and he's now going to rent it out for 15,000 rand per month. He similarly has to declare to Sars his 15,000 rand income and times that by 12, and that's what he declares to Sars. But his expenses that he's going to claim is his 10,000 rand that he's paying to the first landlord. So he's going to claim back 120,000 rand in expenses whilst declaring his 170,000 rand in income.
Okay. All right, Michelle, let's leave it there for now. Please stay on the line. We'll chat to you in a moment. After the break, we hope to get hold of the Commissioner of Sars. Welcome back. Kumbula ukuthi tincingo ndivuliwe ukuthi nawe ke ungavakalisa umbono wakho ungasishala kulicingo ku 0117146918 or 0117146919. You can also email your thoughts to consumer@sabc.co.za. You can interact with us on our Facebook page. Namhla ke sikhuluma ke ngekubhadala kwemthelo njoba senivile ke bekunene ukuthi iSARS sengiyo ke i-tax season nyalo. Sina Michelle Dickens uqhamuka ke at TPN, which is the rental profile or rental property network. And ngiyathemba kulabo labachaza usijona nyalo lokumcoka le kumele ukuthi ukwadi ukuthi ke SARS nyalo ke sofuna kukweleka irent nangabe uqashisa ikamero lakho noma ke indlu yakho noma ke umkhukhu wakho noma ke i-backroom yakho lokumcoka futhi noma ngabe uyayirenta leyo ndlu leyo sophindze uyayirentisa futhi kusho ukuthi nawe wena lo rentisako you are liable for tax ngoba ushito ke Michelle wathi ke nobabili ningema landlords. Now Michelle, and I want us to engage further with regards to compliance. What steps, I know that you're not a Sars official, but what steps do you think that Sars will be taking in order to ensure that people are compliant?
Or data-driven. So what does that mean? SARS attempts to collect as much data as possible from systems that will then feed into the e-filing system in order, one, to make the process easier, more accurate, and also so that SARS is aware of these income streams that people can earn. And this is how the ITB3 forms work. For example, your bankers will submit your ITB3 form to SARS to share the interest that you've earned. Estate agents are required to submit the IT3B forms through to SARS to show the income that you've earned from a rental perspective. So SARS has become a lot more, and it's not new, it's been over a number of years, that they've become a lot more technology focused and data driven in order to do these assessments to make them as easy as possible for individuals to stay compliant.
Yeah, you're quite right there, and I take that point that you made earlier, because we cannot overemphasize the importance of keeping records in terms of collecting rent and in terms of expenses, and the expenses need to be proportionate to the rent collected. Am I correct?
So the first thing is that the Rental Housing Act requires that landlords present their tenants with a receipt for payment.
Okay.
And this is one form of record keeping. So it provides protection both to the tenant that the payment was received, especially if it's a cash payment. And the second is that it provides record keeping for the landlord to be able to prove, should SARS come calling, this was the receipt of the money that we received. And the best way to do that is in a receipt book. If we're going to go back to traditional record keeping that is handwritten, as opposed to using a system to be able to do that. So it's about record keeping from the perspective of what rent was receipted. And the second then would be to be able to claim your expenses. So in order to claim your expenses, and you've got to keep these records for 5 years. So in order to claim your expenses, you need to be able to prove what the expense was for. So the receipt of, for example, if you had to repaint the unit because the tenant had damaged it, then you would need to have the receipt of the paint. Not just the receipt of the paint, but the proof of payment attached there too. So it's not good enough just to say, well, here's the receipt. How did you pay for it? If it was cash, the receipt needs to indicate that. If it was an EFT, you need to be able to show that in your bank statements. So keeping records of how you're paying for the expenses. If it's a cash deal, it makes it more challenging, but I do emphasize that receipt keeping is really, really important. Yeah. If it's more from a formal housing market, there's a number of different ways that you can do it, but certainly ensuring that you are transacting through your bank, if you're formal and you have a bank account, that the rent is coming into that bank account. That's a wonderful way of record keeping, even if it is cash payments. Of course, you can pass your cash deposit fees onto your tenants if your lease agreement makes provision for that. And if it doesn't, you can deduct it as a tax expense. And then when you're making payments for the expenses, having them come through that bank account so that you've got your record keeping. At the end, you're going to submit your tax return. Hopefully it all goes fine, but you may have a tax audit. And that's when it becomes important. SARS may come and say, well, we want to audit the amount you received, or we want to audit the expenses that you're claiming back. That's when the record keeping becomes important.
You know, Michelle, one wonders whether the law is applicable to the urban areas or title deed properties, or does it also extend to rural areas as well?
Absolutely, rural areas. So the Rental Housing Act is clear. It applies to formal as well as traditional housing, as well as informal housing. And SARS is very clear that they collect tax on any form of revenue that you have generated through your property.
Okay, please stay on the line, Michelle. We'll certainly touch base with you in a moment. But for now, let's welcome Sars Commissioner, Mr. Edward Kieswetter. A very good afternoon to you, Mr. Kieswetter. Thank you so much for joining us. Welcome to the show.
Good afternoon, Cynthia. How are you doing?
I'm very well. How are you, sir?
I'm fine, thank you. Thank you.
All good. Yeah, in terms of collecting tax, this tax season, well, I would assume that SARS is having it difficult because of these COVID-19 restrictions, isn't it?
Well, I mean, COVID-19 in many ways, Cynthia, was a mixed blessing for us. Firstly, obviously we needed to make sure that we managed the health risk of our own employees, as well as the risk of transmission by taxpayers when they stand in long queues, which in many ways is undignified and unhelpful. What really benefited us was that we already had a clear strategy and we had initiated our modernization program. So what we really use is the old maxim of never let a good crisis go to waste. We've used this crisis to accelerate our modernization program. So what we can say to your listeners is that we are confident that we have done everything that we could, given the time and resource constraints, to enable them to fulfill the entire obligation that they have to file. So let me go through that just to make it more explicit. Mm-hmm. Firstly, we have posted additional information on our website, educational content, as well as guidance on how to book an appointment, how to claim for home office expenses. So our website has been enriched with additional resources. Secondly, we also have enhanced our e-filing platform. And from the e-filing platform, you can register for income tax, and you can submit your file, you can get a statement of account. So practically everything you need to do. And then we've also introduced a Mobi app for those taxpayers who use their smart devices. And again, you can do all of this on that. And then what we've done this particular season, we've added a SMS service, because we do recognize that not all taxpayers may have a smartphone. That obviously doesn't include you. I'm sure you're very, very tech savvy. But there are those who, and so they can use just a normal phone to SMS using their ID number and a keyword. They can get their tax number, they can get a booking, they can get a balance, they can find out whether they are required to file. So we've really expanded our channels of communication with us.
But Commissioner, we still see long queues at SARS offices, and it suggests that people haven't yet made that shift to digital platforms. What is SARS doing to change that?
Well, so firstly, we have just closed our branches for 6 weeks, which means that if you're going to queue outside a SARS branch now, you're going to find that the offices are closed. What happened last year, because you're quite right, many taxpayers are a little bit more reluctant for various reasons to transfer or convert to e-filing. But we had a very, very good success last year, and we converted 450,000 traditional branch filers which converted onto e-filing platform. We will continue to do that now, and clearly, because our branches are shut, we are also making available additional helplines. So for now, a taxpayer can make an appointment by SMSing an appointment request to us if they're not using a smartphone or a computer. We will then have a session with them where we take them step by step through their filing obligation and help them file online. We've already had almost 7,000 taxpayers who have submitted their return using this facility this year.
Okay. Now, Commissioner, Commissioner, please hold your
important-
thought, Commissioner. We need to take this break now. And after the break, I want us to discuss a little bit more about rental income and how it is taxed and how Sars will wrap its head around ensuring that people are compliant in terms of, complying to pay tax on their rental properties. Let's take another ad break and we'll be with you in a moment. Yilungelo, Lakho. Awusinamukela ke bantu abakethu kule nkulumo yethu namhla ngendlela letisha ke tekukhokhela ke umthelo phasi kwesimo se-COVID-19. Our participation lines are still open. 011-714-6918 or 011-714-69 are our participation lines. You can email your thoughts to consumer@sabc.co.za. Sinesikhulu ke se-Sars Commissioner Edward Kiswetter, siphinde sibe na Michelle Dickens yena ke ubuya TPN, which is the Tenant Profile Network. Utasichazela kabanti ke ngetindzaba letingamela ke bomastandi nabo ke nalabo ke labacashile. Now, Commissioner, in terms of ensuring compliance, I mean, there is the formal and the informal rental market, and I want us to focus a bit more about the township rental market. How is that regulated, and how are you wrapping your heads around ensuring that people are compliant?
So SARS does not regulate the markets, informal or formal. Our mandate is to collect taxes regardless of how that income is derived. That's an important principle. So it doesn't matter whether the income that you receive is received because you have a formal full-time job, or you have a part-time job, or you receive money from casual labor. As your previous caller very eloquently described, that there are certain levels at which your tax obligation is triggered. Mm-hmm. It doesn't really distinguish between how that income is derived. That's the first point. Secondly, to your point, how do we administer that, which is maybe what you mean, rather than how do we regulate that?
Yes.
We start off by expecting taxpayers to disclose their income and their expenses. Because it is a legal obligation, and especially in the informal and self-employed, we do not have the same institutional arrangements as we have with a large employer. So your employer or my employer, we are payroll-driven, so all of your income is administered via your payroll, or expenditure comes through the payroll, so it's easier to administer that. But increasingly, since we were, in the absence of taxpayers making accurate and honest disclosures, SARS is working very hard to use data to detect risks in taxpayer behavior. So, for example, we get third-party data from banks, we get data from insurance companies, from medical service providers. We have access to data from the NATIS, or the motor vehicle register, the housing register, the deeds office, the population register. And increasingly, let me give you an idea of what we did last year. Mm-hmm. We looked at what individuals disclosed through their income tax return, and we interpolated that with the deeds office, and were able to detect individuals who were receiving rental income but not disclosing it. And we were able to raise an additional 500 million rand of additional taxes.
Now, Commissioner, you say that SARS will continue collecting and collating data from banks, insurance companies, etc. But you and I know, Commissioner, that the culture of declaring, in particular, rental income is almost non-existent. I mean, it's cash-based and it's paperless because most of the tenants are unbanked. So how would you be in a position to track that?
So that does make it harder. Obviously, when SARS has identified a risk, we can engage with a taxpayer and raise an assessment based on information we have. So we would caution taxpayers, because we are aware that many of them try and stay below the radar. But we would caution taxpayers to regularize their affairs, because at some point in time, they will enter the formal market. And then SARS can go back 10, 20 years and impose not only the outstanding taxes, but also penalties. And no one wants to find themselves in a position where they have to answer for their tax liability for the last 10 years. So I think at that end of the market, there is obviously an element of goodwill, an element of self-disclosure. But the message that I'm sharing with the viewers is that eventually the arm of the law may be slow. Initially, you may be able to stay under the radar, but eventually you do run the risk of falling foul of the law.
And what are the possible penalties for not paying rental income, or rather, or for not paying tax on rental income?
So first of all, a taxpayer has the following obligations. The first is to register as a taxpayer the minute they become economically active. Once they have registered, they have to submit, as is required in law, an income tax. So if you are a non-provisional earner, you submit tax once a year. If you are a provisional payer, you will pay twice a year on provisional payments, and then a final payment after you've submitted your return. So there's various, depending on your income level, and if you're a trader or a small business, there are other filing obligations. So for example, you may have a VAT vendor, so you may also have to fulfill those obligations. So that's the second obligation, and the third is the obligation to pay. Mm-hmm. So the first is, if you don't fulfill those obligations, you are already in violation of the law and therefore potentially face prosecution. Okay. Secondly, in terms of your payment obligation, SARS is able to make an assessment, and if it is because you have either inaccurately disclosed or not disclosed, we can go back as far into the history as we need to, and we raise the tax that is due, and then depending on the circumstances, there are two other penalties that we can also add. The first is, and I'll use simple language, is the time value of money. Mm-hmm. So if you owe me 100 Rand last year, then this year that 100 Rand would have grown by the interest at which SARS would impute on it. And then the second penalty would be what we call penalty interest, which is therefore when there is, our assessment is that you also had a criminal intent or willfully try to evade your tax obligation.
Okay. What about subletting? And I pose this question to Michelle Deakins as well. What about if I rent a property and then I sublet it? Who's liable for tax? Is it me who's rented the property, or is it the property owner?
So if the property owner owns the property but does not operate the rental operation, then you become the client of the property owner, and between you and the property owner, there will be a rental contract, which would be of a longer term nature. Then if you're selling beds per night, you are running a bed, typically a guest house or an Airbnb. You're running a business of selling beds or nights. So you are in fact both in businesses, but different kinds of businesses. The long-term agreement between you and the owner of the property, that owner must disclose the rental income received from you, and can deduct any expenses in terms of the maintenance of that property and any other costs that they may incur. But then you, as the renter, who is subletting it, who's renting a portion of that property or the whole property, you are then on selling space for which you derive income, and that income will be taxable after expenses have been incurred. So you are both, in fact, in a business, but slightly differently.
Okay, so we are both landlords, and the owner of the property gets rent from me, and I get rent from my tenant. So we're both landlords and both liable to tax, isn't it?
Absolutely.
Okay. All right. Let's leave it there for now. Commissioner, please stay on the line. We'll certainly touch base with you in a moment. And Michelle, after the break, I'll also, touch base with you. But for now, let's take our final commercial break. Yilungelo, Lakho. Welcome to our final segment, and we now have on the line Michelle Deacon, CEO of the Tenant Profile Network. Welcome back, Michelle. Thank you so much for staying with us. So as we wrap the show, Michelle, what is it that property owners need to know, especially property owners, those who lease their properties or they lease their rooms or back rooms? What is it that they need to know with regards to the new information, perhaps that's coming through from Sars, that Sars is targeting their rooms or their rental income?
So I think the most important thing that's come out of this is record keeping. So the ability for landlords, and it doesn't matter, as the Commissioner has said, whether you are in the informal rental market or the formal rental market, record keeping is a key fundamental to be able to submit or claim any of your tax expenses. The second thing is that your rental income the SARS isn't going to tax you on your income, they're going to tax you on your profit. And I think that's an important concept for our landlords to wrap their heads around. The third thing is that big data drives the ability for SARS to ensure that we become more compliant. And yes, cash paying tenants and cash-based landlords is difficult, but not, a lot of properties, even RDP properties, are on the deeds register. And so SARS will be able to identify types of assessments that could be applicable to people who feel that they may be under the radar. It's an important concept, I think.
Okay, Michelle, thank you so much for raising that point. Now, Commissioner, back to you. How do you navigate around the issue of the difficulty that taxpayers have in terms of trying to make an appointment with SARS online?
I'm not sure what you mean by difficulty, Simpiwe.
Well, we've heard so many queries of people trying to make appointments and they were not able to.
No. So there's a very, very simple way to do the appointment. So one is an SMS. The second is to go onto our website to make an appointment.
Okay.
So
please share the details of the SMS and as well as the website.
So the SMS number is 47277.
47277.
They send us an SMS with their ID number and either say if it's an appointment they want, just the keyword booking.
Okay.
If it's a tax number they want, they just say tax number, or balance if they say balance. So the keyword plus their ID number using the SMS service 47277. Then there's a toll-free number that they can use I'll give you the toll-free number in a moment. And then those who are using their smartphones can go directly onto our website and they can get the details from there. And our website.
We do have the toll-free number on your screens, and I'm sure the viewers can actually see the number on your screens, the number that you can call and make that query or appointment with SARS. Now, Commissioner, when it comes to people claiming for their properties from SARS, because we know that COVID-19 regulations, require that people work from home. Well, certain people are required to work from home. What if a person is using a personal home or a room and then claims from SARS because they're using that for commercial purposes?
So again, we have given an update clarity statement on that. So our website is fully updated. But just in summary, the first principle is that you must have a dedicated area or room in your house that you are using exclusively as a home office.
Okay.
Firstly. Secondly, you must deliver more than 50% of your work from that facility. And thirdly, you must have incurred actual expense in the production of your income for that to qualify as a minimum. Then what we have said is we've cautioned taxpayers that before they submit such an expense, that they should take firstly into consideration that there is a more favorable capital gains tax calculation for primary residence as opposed to a property that you use for business income or for business purposes. And so by assigning a portion of your house for business purposes, that portion will be excluded from your primary primary residence provision. And I think it's just about saying is, do I want to run with that compromise for a short-term benefit, or would I rather just bite the bullet now and not compromise my home?
Okay.
Because it is something you should take into account. And quite frankly, sometimes, if you've really not incurred significant expenses, it may not be worth your while.
Unfortunately, Commissioner, we are out of time. We really need to wrap the show. Thank you so much, Commissioner Edward Kizweta, for joining us. And we do appreciate your time as well. Michelle Deakins, CEO of the Tenant Profile Network. Thank you so much for joining us. Hayi ke bekunene ke sesifika kanjalo kumaphethelweni elihlelo lethu namhla ngichaza kubonga ke ama guest ethu ekuba nathi kuze kube manje. Till next time then, goodbye from Johannesburg.
Lakho mngani wami